Going into 2 o'clock, the market had the Federal Reserve priced at better than 2-to-1 for a hold. The Fed held the expected outcome, and the S&P 500 spent the day falling to a one-month low. This is the Algo Index market close. The mover was not the rate. It was the 30-year Treasury yield, which ran to 5.2% right after the decision, a fresh high for the year, and dragged equities down with it. Stocks, bonds, and the dollar all fell, while gold held above 4,000, the fingerprint of an inflation worry, not a growth scare. The index closed near 7,316, down 1.5%. The Nasdaq lost 2%. One promise: before we finish, I will put you inside the exact minute the afternoon turned, at a single price, and show you the one line that rally was never getting past. Three forces drove it. First, the long end. The 30-year yield jumped to 5.2% as the statement landed, and three committee members dissented, wanting a hike, not a cut. A hard hold the bond market read as hawkish. Second, dealer hedging held prices up through midday, roughly $10 billion of it, then rolled over near 3 o'clock, with nothing slow underneath to cushion the drop. Third, dealers sit in negative gamma, their hedging flipping at 7,385, with a pocket of it stretching down to 7,000. So beneath that line, every sale forces another. And an honest note, last night we said a hold would likely relieve this market higher. The hold came, the market fell, because the decision that mattered was not the one everyone watched. The loudest options positioning today was on the index, 1 hour before the Fed. Around 1 o'clock, 13,000 contracts stacked on the 7,290 put strike, well below the market, right before a call nobody could make. Whether that was a hedge or a directional bet, the read does not say, and I will not pretend it does. But the afternoon chased straight toward it, and an 8,000 lot structure nearby had its lower edge broken into the close. The serious money spent the hour before the decision preparing for the zone the market fell into. 3 wins and 1 small loss on a 200-point day. 2 shorts caught the morning grind. 1 long countertrend try was wrong and cut fast for 8 points. And 1 long into the 2 o'clock pop paid 7.5 before we stepped aside ahead of 3 o'clock. Flat, not long, when the market handed those points and 100 more back. Single leg, defined risk. The map named 7,450 as the ceiling hours early, and it rejected the rally to the tick. Tomorrow escalates. 8:30 brings growth, and the Fed's preferred inflation gauge in one release, and it gates everything. Core inflation is forecast to ease to 3.3% the morning after 3 officials voted to hike, so a hot number is the real risk. Apple and Amazon report after the close.